What's going on, guys? Welcome back to another inter-equity video. Today we're going to be continuing that series you guys all love, training the eyes. This is going to be episode 4. Today we're going to be covering a little bit of price action on NQ. Again, training that eye to see these concepts in live time. Let's hop right into it. All right, guys, so we are on NQ on the 15-minute chart. I'm on the replay tool right now. Okay, a reason being is I want to emulate live time as much as possible. So showing you guys what I see in this current moment and then playing out price slowly, and then we'll continue marking the chart up as price unfolds in front of us. Okay, so right now we are on the 15-minute time frame. I have price rewinded to around 8 a.m. So just about New York open, not stock open, but New York open. Now let's mark up this chart in front of us, kind of build that narrative. So what can I see right away? On Wednesday in New York session, we grabbed these highs. Okay, you can see that we have imbalances above, but we grab these highs and then move away. So why is that important? This now tells me that we're starting to build liquidity at these highs. Okay, so if I drag this all over, and again, we'll tap into some more current price action in a moment here, but talking about this high here. So again, taking out these highs, tapping into these imbalances on the left-hand side, and then selling off to the downside. Okay, clearing some internal lows here. After that, we go back long. Okay, why? We're now gonna have liquidity above this high. This is where sellers are gonna be tucking their stop losses. Okay, so look how price runs for that high. Something that's important that we need to touch on here is, since we have now we're starting to build liquidity at this high, and when I mean this high, I mean this one right here at 23,552. Okay, look at this. Once, 2 times, and now 3 times on this current day. We have now tapped into this area. We've been respecting it over and over and over. So now just think about it from that retail perspective. Okay, the amount of liquidity that's being built and engineered above that high. Okay, coming into today's price action, okay, we're gonna hop into the 5-minute now so we can look at more of an intraday perspective. Same thing occurs, just like what happened over here. We took out this high, but look what we left from the left-hand side. Okay, still leaving that high from the left, 23,552. We have to keep an eye on that. Okay, now again, timing wise, it's 8:15, and just because I remember we did have 8:30 news event. So let's mark that on actually for you guys. So 8:30, and then we'll also put on stock open. Okay, so again, 8:30 is a fundamental news event, 9:30 being stock open. Okay, both relevant times for us, both important times for us. So we'll drag that over, clean this chart up a little bit. Now looking at more current price action, what can I see? One thing I want to point out is right at London open, okay, literally right at London open, 3 a.m., price builds all this liquidity pre-London open, and then right at London open, stabs below, grabs that liquidity. Anybody buying, trapped. Okay, then we go long. All right, now something very important I want to point out here is, I can actually even open this up on the 1 minute to show you guys, but again, we want to train this eye to see this over and over and over. What do I see? A run on liquidity at London open, and then right away, look how we built all this liquidity from all of these lows. Look at this. If I drag this all the way over, you can see how lows respected lows here, and then here, and then here, and then just continued up and up and up and up, building all of that liquidity at the lows. Simple thing here is grab this low, okay? And now, ideally, we do not want to be buying unless this low gets taken out, okay? Because then when that low gets taken out, we now understand that we've ran a form of liquidity, right? We've taken buyer's liquidity. Now looking at more relevant, more current PA here on the 1 minute time frame, what can we see? So going into New York open, 7:30 here, finally trading around New York open, 7:55 a.m. we go long. Okay, what do we go long from? Absolutely nothing. Okay, if I can just mark this random area out, but this is all liquidity, right? So what does this tell me? Any longs in this area should be a false reaction. Okay, and look what happens. We take out this high, and then we take out these highs as well. We can mark this on just like this. Perfect. Now think about the importance of this bullish move we've had from A to B. This induces buyers. right? People thinking that this is a momentum switch, a break of structure. There's going to be buyers looking to get in positions down at the low. And again, I understand that. I want to understand that because I like to anticipate and expect these moves to occur instead of them happening right in front of my face and I'm shocked, I'm surprised, right? So again, I'm anticipating, I'm expecting false reactions in this area, all right? And now, if we get this run below these lows, okay, look what price has slowly been doing this whole time as well, right? If I draw this, what has it been doing? It's been engineering liquidity at the highs for us. And don't forget, we have this high we've left on the left, 23,552. Do not forget about that high. So again, look what time it is. Right at a news event. I will never, and those who are in my community and on the live calls know that I will never take a position before a news event. I'm always going to wait for the news event to occur and then capitalize afterwards. Okay, because typically what happens before these news events is we build liquidity. And big surprise, look at this. We're building liquidity. News event occurs. We get a sell off to the downside. And struggle a little bit at the low. Finally, we take it. Now, as soon as we took the low, this is now where my buy entry is. I'm taking buys anywhere below this low because look at this massive imbalance we have. Okay. The thing is, I don't need the bottom. Sure, price can come down and tap this candle fill at the very bottom, or it can come to this 1 minute imbalance. That's fine. However, I do not need the bottom. I understand that price can go long anywhere in this area here, essentially anywhere below this black line, the liquidity. Okay, so that's why I'm entering there, and my stop loss remains in a safe spot here. So I'm going to tuck my stop loss below this low, just like this. Okay, now what can I target? Couple different targets in mind. First target always needs to be the structural high here. Why? Because this is now where seller liquidity is going to be. Okay, so what tends to happen is sometimes if we come back lower, then maybe we go long. Okay, it does not mean we're going to sell all the way back down. However, we understand that there can be reactions because there's liquidity above this high. So pullbacks can occur. Okay, and then maybe you have that continuation, or sometimes we'll just a pullback will occur and then we just go bearish. Okay. However, I want to be able to take advantage of taking profits above this high, paying myself above this high. Because again, I understand that there could be bearish reactions in the market. Okay. Now, at this current moment, it is 8:50. When I took this entry, I understood that my stop needed to stay below this low. And we still had stock open in about 30 minutes. So price could kind of screw around for the next 30 minutes and be slow, be sluggish, and that's exactly what we did. Look at this. So now we're approaching New York, our stock open, sorry. You can see right at stock open, if I zoom in, again, same thing occurs on the M1 over here. We take out highs, it induces buyers, then price comes back down and stabs that low out once more. And in this scenario, it actually fills that M1 imbalance here. Okay, so sure, you could have waited for that extreme and that would have worked out for you. However, something I just want to tell you guys is it's not always going to occur. Okay, so my best advice for you is this is going to be the better entry here. Okay, I want you guys to be taking these kind of entries, not this, because you're going to be missing a lot of trades. And again, you don't need the bottom, you need the correct direction. That's what pays the profits. What am I going to be targeting? Again, train these eyes to see this. While this whole setup was forming, while this whole buy setup was forming, price engineered liquidity to the upside for us. Okay, sellers entered here, and over here. Okay, so you have multiple targets. I'm not going to just target something over here or something over here because that's not big enough for myself. I understand that I'm going to be targeting this structural point. Okay, and then if I want to hold any partials, again, I would target that high on the left hand side. Okay, because that's where that final liquidity point for me is going to be on more of the higher time frame perspective. Okay, now if I play this out, actually happened played out relatively quick, but there you go, full target met, just over a 1 to 3. And as soon as stock open was announced, look at this, 4 1-minute candles straight to target. Okay, now I actually took this trade myself live. Now I want to cover something though, and this is something everyone screws up on. Look how we've now taken out this high. Again, same thing applies that we've been talking about this whole time. Buyers induce. This is going to be a trap. We do not want to be buying from that. Also, look at this. Lots of liquidity at the lows. So, and again, I called this live. I said I don't want to be looking for any buy positions until this low is taken. Why? Look at the liquidity we've now built to the lows. right? And we've now just induced higher. This is now a trap. We do not want to be entering buys in here. Guys, this is going to be a big mistake. Even below these lows, big mistake. Need to be waiting for this low here. Okay? So, if I play out price action here, check this out. We come to the low, look at this. We struggled for like, what, 15, 25 minutes we struggled to low, inducing buyers. Finally, we get that run below. Why is this important? This move from here, high to low, induces sellers. Okay? Now think about it. Where did we just go short from? Absolutely nothing. We've been building liquidity at this high forever. Once, twice, 3 times. Now we get that false sell-off here from high to low. This is an automatic buy back up, guys. You want to be buying this kind of price action anytime this occurs. And look what happens. We struggle in the red box. Why do we struggle here? Same thing over and over. Sellers interested in pushing price down. Sellers interested in pushing price down in this area. And that's exactly why we struggled here for about 45, 50 minutes. And then finally, look at that. From low to high, we grab that liquidity. Okay? Trapping buyers and then finally trapping the sellers here. All right, guys, hope you enjoyed the 4th episode to this series. We're going to be recording lots more, I promise you guys, because all these comments are telling me that you guys are gaining a lot of value from these. Please like, comment, subscribe if you haven't already, and we'll see you guys soon.